broadcasting around the world. This is the Hard Asset Money Show. Your wealth, your money, your future. Serious talk about what's happening and how you profit. Hosted by Christian Briggs. Follow him on X at BMC_HAM. Live in 3, 2, 1.
Welcome back. So yesterday we talked a lot about the big, beautiful bill, which we're going to do some follow-up on. But I think one of the biggest things I've been asked is not just the BBB, what a stablecoin is, but how does this coin work? It's the Genius Act. We're trying to really put forth an effort here to get people to understand some of the things of which are happening at the federal level, that how it's going to then work its way to the state levels, because the federal government puts the policy in place that conveys all the monetary policy. States do have the right to issue their own form of currency, whether it's gold, silver, or paper, but it's only utilized within the state. Those laws do exist, and lots of states have already passed those laws, so that's good news. But I think what we're going to do, and what people need to realize, is the federal government, and it doesn't matter who's president, we're moving to a digital age, and all of this stuff is happening at absolute light speed. I mean, the speed of which we're starting to convert from cash to a cashless society into a digital state, from the federal level to the state level to the local level to the entire mindset, exclusively within the next 24 to 36 months is the way it's kind of looking. That's what I'm hearing, that cash is going to become toxic, and we're going to move into these digital assets to compete on a global international monetary basis. Today's show is going to be on the Genius Act. How does that play with the centralized digital currency? How does it play into everyday life? Where's cash going to go, and how is it going to work, if it's going to work at all? And are we going to start bartering stuff till we maintain privacy? Make no mistake about it. Once we go digital, you ain't going to go back. You give away enough free, there's a cost to it. Well, this is not about efficiency, not about convenience, and it's not about safety. This is about the privacy of a transaction being taken away, and full-blown programmable money is right here. It is today, and it's already launched in places around the world. We're going to talk about where and how it's going to make a huge difference in the next 6 months or less. Could be 4 months in Europe. Don't go away. We're going to talk about the revolution of digital AI technology and how it's going to affect us. I'm Christian Briggs. I'll be right back.
This podcast is brought to you by Hard Asset Management. We have the guaranteed lowest prices on all precious metals and rare coins. Call us at 844-426-4653. That's 844-426-4653.
Welcome back, everybody. So today's show, we're going to go right to the heart of the Genius Act, proposed by Senator Tim Scott, was the leading author. A lot of senators had signed on to the bill. Let's talk a little bit about what passed on the 17th, just a couple weeks ago. On June 17th, the U.S. Senate voted 68-30. What does that mean? You had Democrats signing on that. Yes, I know what you're thinking. That's worrisome. You are right. When a lot of Democrats vote for something, sometimes that should give us a little pause, especially Adam Schiff, Shifty Shift, to pass S. Bill 1582, the Guiding and Establishing National Innovation for U.S. Stablecoins Act, known as the Genius Act. That's actually a brilliant little name, Genius Act. I like that. I think I should have come up with that. Maybe I did come up with that. Maybe that defines who we all are that figured it out. This represents a landmark effort by the U.S. Congress to establish a comprehensive federal framework for the regulation of payment stablecoins. What's a stablecoin? Passed with bipartisan support in the Senate, the act aims to provide regulatory clarity, enhance consumer protection, and safeguard national security in the rapidly growing stablecoin sector. Regulatory clarity? Does that sound like more transparency? Is that transparency good, or is it the removal of privacy? Enhance consumer protection. Sounds like safety. Remember what Reagan said. If the government tells you they're here to help with safety, efficiency, privacy, they're lying, or there's some moment to pause. And safeguard national security in the rapidly growing stablecoin sector. Yes, exactly. I know what you're thinking. Remember, we only have 54 Republican senators. That means about 15 Democrats, non-Republicans, signed on to the Genius Act. Let's break it down. Maybe it's not as sinister as it sounds. I like to give everybody the opportunity to tell the story, hear it from them firsthand. talk, debate, communicate, and determine the value. The act is designed to close regulatory gaps, mitigate systematic risk, and maintain the U.S. dollar's dominance in the digital economy. It seeks to provide a clear legal pathway for stablecoin innovation while ensuring consumer and financial system protection. Sounds great. Those are the policy objectives. The Act defines payment stablecoins as digital assets designed to maintain a stable value relative to a fixed amount of US dollars or similarly liquid assets and intended for use as a means of payment or settlement. Stablecoin issuers will be legally authorized to issue payment stablecoins in the US. What is a stablecoin? It's a token, a uniquely identifiable serialized token that backs an asset, in this case a US dollar. Now you can back that stable coin with liquid assets. Treasuries, obviously, is what they're talking about doing. So reserve and redemption requirements. This is a big deal. Full reserve backing. Let's talk about that. Stable coins are there to back an asset, to trail it, to follow it, to be almost like an umbilical cord, and to solidify its value proposition. Issuers must maintain reserves on at least a one-to-one basis with the value of the outstanding stablecoins. Permitted reserves include, like a casino. Federal Reserve Authority or the Office of Currency through this legislation gives authority to banks. Banks, you have to have a bank license to be able to do this. And it allows them to issue these stablecoins. It could be Coinbase, it could be Robinhood, it could be Bank of America, but it has to be a licensed financial institution because it's got to get like a bank charter. And what it does is it allows the issuer to issue stable coins provided they have a one-for-one backing. So for example, if I have $1 billion in cash, I can issue $1 billion in stable coin. If I have $1 billion in short-term treasuries, which is bonds or notes or treasury bills issued by the United States government with a remaining maturity of 93 days or less, it stabilizes what the coin's value is. Certainly a measure of like a money market. It's kind of like a money market where we put money into a money market means that the money is going into short-term treasuries that mature very quickly. So there's no real risk of default of the money market. Even though it happened in 2008, there was a moment there in late 2008 where money markets went below that $1 value for $1 on deposit. It went down to like 88 cents. So it does have the ability to lose money, but that's what they're trying to get rid of. So a stable coin would be something we buy, issued by a financial institution, licensed or chartered by the U.S. government or governments around the world. And then they would go to these banks or financial institutions, and then they would have on deposit assets of equal weight, like a casino. A casino has $150 million worth of chips on the floor on any given day, maybe $200 million, let's say. They have to have that much in cash on hand, in theory, in case redemption of the chips equals 100%. You got to have the cash there. It doesn't happen, but let's say it did. Everybody has decided they won enough, and everybody at the casino that night, $200 million in chips, went to the gamblers. They won. They got it. They go to the casino redemption cage where the cash is given in lieu of the chips. Theoretically, the same thing has to apply to these financial institutions that are required to have assets to back the stable coins into equal value, one for one. Short-term repurchase and reverse repurchase agreements backed by treasuries. That's simple. Demand deposit or insured shares of IDIs. Simple. Money market funds invested in any of the above assets. Again, short-term stuff. But here's what's interesting, and bear with me a little bit because some of this may be over your head, but I'm going to come back and try to expand in a very easy to understand form. And that is this. If we're starting to go to a digital age where cash is going to become obsolete, the Treasury has made it very toxic with all the ways in which you have to report various things of which you get cash or buy and sell goods. And we go to a cashless society, and this is the only way to transact. And you always have this, unless you want one of those new Apple chips that they're testing, which will go into your body, in your forehead or your arm, or I think it's your head now because it's a brain chip. Transmitter sends signals to phones, and they've already got people that are actually able to use and play on Xbox with no controllers just by mind thoughts. This is not theory. This is happening already. The next wave of conversion is to go from cashless to digital, But what would stop a government or a person in a position of such authority and power to say, we don't need to have this? What if we just went to a more exclusive, centralized form of payment token, and then we token all the assets? And that's kind of what has been talked about among a lot of people in D.C. Not that this bill does that, but it definitely opens the door wide. In order to become centralized systems, which is complete government control, you first have to digitalize it. You can't do it with cash. You can't centralize a digital asset while there's still cash remaining. So you got to come in there, kind of like, well, taxes, 1913. I think it was 1%, 2%, and 3% tax. 3% was the max for those zillionaires at the time, which were millionaires. And they would never think about increasing those tax rates. No. Or Social Security tax, or real estate tax, or VAT tax, or some states have wealth tax. Now, we would never think about those things, but we did. And if you look at people living in California, between federal, state, tax on your car, this tax, that tax, I mean, people pay like 70%. In theory, you can pay up to 68 or 70%. You got a yacht? There's a tax on that. That's why you got to ship it from California to Mexico for 6 months in a day, or they tax it as a wealth tax, as an asset. So this Genius Act comes in, says we're going to go to digital assets, which will continue to move us toward a digital world. Tokenization of assets are happening, whether it's your stock account, bond account. They're tokenizing stocks. Already you can buy tokens instead of the share. And that's what they're doing. So let's talk about this. How does the regulatory oversight and licensing work if we're going to start to move to digital? Well, the federal and state rules would be as follows, and the roles of which they would play within this marketplace. Issuers with over $10 billion in market capitalization are subject to federal oversight from the Federal Reserve. Obviously, Office of the Comptroller of the Currency, the OCC, Federal Deposit Insurance Corporation, which is the FDIC, National Credit Union Administration, NCUA. Okay, so these all are the oversight regulatory agencies. So the Reserve is not an agency, but has the authority to work as an agency and has more power than it should. Capital requirements, liquidity standards, reserve asset diversification, operational, compliance, and information technology risk management, principles-based requirements and standards. These are all requirements in order to become a stablecoin issuer, basically a financial institution that's licensed to be able to do these. State-qualified payment stablecoin issuers of not more than $10 billion would be allowed to choose state-level regulation if the state's regime is substantially similar to federal standards. Got it. So it goes down: licensing, supervising, all these marketing restrictions, different things, operational limits, custodial services. Oh, let's talk about custodial services and custodian requirements. Now that's a good one. The companies that are going to offer this service, where they'll hold your stable coins, which is third party, are permitted to provide custodial services for payment stablecoins, private keys of payment stablecoins, or reserves backing payment stablecoins. Private keys. What are private keys? Private keys are the keys to move the asset on a blockchain. It's a digital ledger. Blockchain is code that identifies an asset. The ledger then puts it in there so you can comprehensively see it in the blockchain. Blockchain is the technology. Digital ledger is the ability to see it, who owns what, and to move the money or the asset. Or if it's a deed to your house, it's a title to your car. 2-3 years ago when I told people this was coming, they thought, oh, you're crazy. This is not going to happen. Never. No, it's never going to happen. Not only does it basically look like it's going to go global sooner than later, that sooner is much sooner than people thought. It's a lot more interesting, let's just say that, than what even I thought 2-3 years ago. So you have this third-party custodian rights, or self-custody to some degree, but not really. Custodian requirements shall not apply to any person solely on the basis that such person engaged in business providing hardware or software to facilitate a customer's self-custody of their payment stablecoins or private keys. What does that mean? So what that means is that you may have self-custody in here, but really you have third-party custody because they're the ones holding it, even if it says you have the right of which that private key, which is basically a code, like a combination to a safe, if you will, to where you enter that and then it moves the assets in and around and on the blockchain. and the ledger records it. But what happens if they think you've done something wrong? What happens if they feel, well, you might do a crime? You might be a person that's more likely to do something nefarious. They lock it down, lock it up. That's it. You're out before you can even go, what just happened? So you have ML, which is a deep version of doing background checks, anti-money laundering and national security. So they do background checks or a deep dive to identify anybody that would not be in compliance, called Know Your Customer. Technical enforcement. Issuers must demonstrate the technical ability to comply with lawful orders, including the ability to freeze, block, or burn stablecoins as directed by courts or federal agencies. And that's right here in the bill. Issuers must demonstrate the technical capability to comply with lawful orders, including, but not limited to, the ability to freeze, block, or burn your stablecoins as directed by courts or federal agencies.
Digital ID, your passport, your driver's license, your bank account, your medical records, your social media, all in one secure place. Secure for whom? It is the master key to your existence, a central point of failure, a tool for total compliance. One misinformation post, one unapproved transaction, one trip outside your 15-minute zone, and your access to society can be switched off. It is not an ID, it is a social credit score waiting to be activated.
They're going to eventually, this will become the law of the land, and when it is, we will convert fairly quickly to this, and we will be moving from what we have to what is coming, which is here. Now, if anybody thought I was a little far ahead of time, I wasn't. If anybody wondered why I recommended precious metals and rare coins, because it diversifies and privatizes your assets, or at least a portion of your assets, well, now you know. I wasn't wrong. I may have been a little early in some degree. I may have been a little bit late for some people, but either way, I wasn't wrong. When you start to see these assets that I've recommended and talked about and sold, and through the company here was able to provide an opportunity for people to buy these assets. It's my opinion that some of the gold and silver from years ago and the rare coins, rare art, rare cars was going to be a method of which the very wealthy was going to start to move cash, and or certainly parts of their wealth, or all of it, into these other assets, these hard assets, because we knew this was going to happen. Now, everybody bet that it was going to be under Kamala Harris's watch. Nope. This was what's happening, is the first step to being put into compliance, to be put into an understanding that we are moving to a cashless society, number one. Number two, a programmable money society and infrastructure, fiscal policy. And third, we have digital ideas already coming. It's already here. Been to the airport lately? You'll need that to be able to travel, to be able to move your money. And as we move, and once it happens into centralized, which is basically what this is, it may be a quasi-hybrid, but it's centralized, because in order to meet the definition of centralized, an authoritative government body would have to have the authority to instantly turn it on or turn it off, and they do with this. They can freeze it just like that. So what's next? The act represents a significant shift in U.S. financial regulation, introducing a tightly regulated environment of stablecoins, paving the way for more widespread mainstream adoption of payment stablecoins by the general public by mandating full reserve backing, robust oversight. Ooh, robust oversight. Ooh, Lewis, did you hear that word? Lewis heard the word robust oversight. What that means is, think of it like an 800-pound gorilla on your back, overlooking you 24/7. And a strong consumer and national security protections. Oh, it's consumer and national security protection. Is that what it's called? Certainly, maybe it's not me that would call it. I would call it government oversight that goes far beyond. The act aims to foster innovation while still safeguarding safety. Remember what Ronald Reagan said? The government's here to help you and to keep you safe. Next, the acts will go before the House of Representatives. It is expected that a conference committee comprised of members of both chambers will be formed to reconcile the Genius Act with the House is similar but not identical stablecoin transparency and accountability for a better digital ledger economy called the Stable Act. Once the committee is able to reconcile the differences between the two bills in a manner that is acceptable to both chambers of Congress, they will draft a conference report containing the agreed upon text of the bill, which will require separate approval by the House, then the Senate. And once they do that, it will be sent to the president for his signature. For some of you out there that thought I was a little too soon, you are better off being early to the party, enjoying the festivities, than being late and missing it altogether or any part of it. Michael Berry is a genius when it came to 2007. He was a year and a half early, but he wasn't wrong. I'm not wrong. We're going to head this direction. We're now at that pivotal point when the next 6 to 8 weeks, we will be moving into that arena, and watch what happens to hard assets over the next 3 to 5 years. Because remember, come October, it's still anticipated that the euro will start to debut. I believe October 18th is the date they've set. I could fluctuate. I did hear it could be the 22nd, the 25th of October. Just 2 weeks ago, 18 of the largest banking nations in the Caribbean centralized all of their digital currency from their banking perspective and their community there, and they're tying into the China, the BRICS, the European Union's new rails. They're bypassing SWIFT. So it's here. You're going to have 60, 70 countries within 6 to 12 months, probably ours, centralizing in some way. This centralizes the power of the government. And what happens when Trump leaves? Democrats or somebody that would not give 2 cents to the freedoms that we enjoy now. And what happens? Know this. This is all information you can see online. You can read it for yourself. There's nothing here that isn't at your fingertips. We are going to take a break. We'll be right back. And then we're going to talk a little bit more about this and what you can do about it.
The Hard Asset Money Show will be right back after a word from our sponsor. In uncertain times, the smartest money doesn't sit in the stock market, it holds weight. The price of gold has surpassed $3,300 per ounce, up from $1,800 just last year. Silver is currently around $37 an ounce, a 102% increase from roughly $18 5 years ago. Gold is up, silver is rising, but rare coins, they're outperforming both. The Rare Coin Index recently hit 760, just shy of its all-time high of 767 from June 2024. These aren't guesses, these are hammer prices, public auctions, real money, real results. According to PCGS Price Guide, an 1849 $20 grade proof 64 plus was valued at $20 million in November 2021, and today it is worth $25 million, a rise of $5 million in less than 4 years. On April 2024, a 1921 $20 satin strike grade SP58 was valued at $750,000 according to PCGS Price Guide. Today, it is valued at $2.2 million, rising $1,450,000 in that span. Follow on X at BMC_HAM for all news and the latest developments.
Okay, welcome back. So we started talking about this Genius Act and the Stable Act for the House side. In order to get nefarious things put into motion, you have to start off with the greatest of intentions by the good guys. There's no nefarious actions or intent in this bill. It's what it will evolve to, even though other Republicans that voted for it don't like a lot of it. It's kind of like some of the Republican senators in the Senate on the big, beautiful bill, which we said yesterday. Some don't like it, but they voted for it because they got something out of it for their constituents, and I understand that. The stablecoin bill introduced is criticized. Look, we got to go both sides on this thing. I'm giving you exactly how I read it as the act was given to the public. Now let's talk about some of the people who either voted for it, work in D.C. These aren't Republicans, they're not Democrats. They're just independent think tanks that are putting out their version. Some like it, but most don't because it's a gateway. Let me read this to you. Centralized digital currency in this country sooner than later, because once we go digital, we are not going to go back. It is criticized as a potential gateway for central bank digital currency control over the guise of privatization. There's no question. That's a true statement. Think of it like this. A gun doesn't kill, but people does. You give guns to 1,000 people, whatever, wherever you want to give them, there's going to be somebody that's going to use it in the wrong way. It only takes one. The bill's stricter regulations on stablecoins mimics the EU's, European Union's MICA framework and could centralize control while appearing decentralized. That is absolutely true. I know this stuff inside and out. Everybody who watches this show right now that's in DC and Congress know that I know this stuff because I helped understand this stuff to them 4 or 5 years ago. I'm all for this bill in a sense, provided the safeguards and checks and balances are in it. The bill includes provisions like anti-money laundering and reserve requirements, potentially favoring U.S.-based insurers. True. Critics advocate for decentralized alternatives to counter government influence in crypto. That's a fact. Can you have a decentralized stablecoin? Good question. Because if you can, it automatically defaults as a centralized. It needs to have an issuer. By definition, that introduces a form of centralization. The network that the stablecoins run on may be decentralized. The issuer is either a private entity with transparent holdings that show asset backing and treasury audits to establish trust, or it's a central bank whereby those transparency requirements may be more relaxed and the trust is inherited in the government structure, although this is debatable. Now, if we take this to the next level, let's say Trump's out, we're all digital in 3 years, 3.5 years, and somebody comes in who is a big proponent of central bank digital currencies. Look at Joe Biden. He was in office for a very short period and signed an executive order to expand and accelerate a central bank digital currency. That's a fact. Go look it up. He signed an executive order to expand it, and they built it under a thing called the Hamilton Project. So now we have custodial stablecoins or CBDCs by way of private proxy. See, here's what happens. When you have a third party holding your money that can lock it up like that, and they have all new regulatory authority. I mean, the government's going to have massive amount of new authority, like in England. If you appear, you might be using the money nefariously or in a bad way, they shut it off. Now they have to get a court order, go to the judge. You've got gold in your safe. You've got cash. You still have means to fight. Once we go 100% digital, good luck, because you will not be able to take it back. Watch with all the trillions of dollars in cash. You think they're all going to allow digital just to happen and say, oh, it's done. Government just transitioned my cash into tokenization of stable coins or credits. All my assets are tokenized. There's a whole article today on the tokenization of stock accounts, bond accounts, real estate. It's already happening. The dark side of tokenization, from a monetary policy all the way to an asset policy, once you have smart contracts, which are contractually shows who owns what or who is entitled to something, once they smart that, which means they put it into a digital ledger, you no longer have the opportunity to move that money around without an encryption key called a private key. All of this is happening in real time. This is already done. Let me just kind of read you a little bit about, and this just came out. This was just a month ago. And there's a lot of this. The potential rising star of AI and crypto asset tokenization. This is not good. This is one of those moments where you don't want to be the person that says, oh gosh, this guy was right. I know I'm right because I've seen this play out before. And whether it's the way it's playing out is they want to centralize everything on a ledger, from your money to your house, to your car, to your employment contract, to your stock account, bond account, everything. And guess what? It's already happening. Go look it up. Centralization and the dark side of asset tokenization. There's hundreds of articles. And how are they doing it? Stable coins are the largest tokenized RWA niche with a market cap of hundreds of billions of dollars. One of the downsides we have to understand is once they have control of the algorithm, which is the flow of the tokens, they can stop it in the middle, they can hold it and freeze it. This is where we're at. Most tokenized assets are being issued on permissioned or semi-centralized blockchains. That means partial. Centralized blockchains. This gives authorities the power to issue restrictions or confiscate assets instantly. The tokenization of assets such as real estate or bonds is now fully being executed upon. BlackRock is doing it. Major banks are doing it. Mortgage companies, counties, insurance companies are doing it. If the property or company behind the token is local in a country with an unstable legal environment or high political volatility, the risk of confiscation massively increases. RWA tokenization is a project to become a multi-trillion sector in the next few years as the world's assets come on chain, on the blockchain, which will increase the velocity of money and extend the reach of capital markets worldwide. This is already happening, and this is what you have to look forward to. So when you get upset and you get left behind and all your money is digitalized and you do something that they just don't like, maybe you vote the wrong way, maybe you spend too much money on diesel fuel, maybe you travel too much, your carbon footprint isn't there. Do not be upset because you were told while you still can. It's like the old saying was, while you can, you should, before it's too late where you can't. And I'm going to tell you something. You think gold's going up because it's shiny? Do you think hard assets in general are going up because everybody decides one morning that they want something really pretty or rare? They're going up because people are emotional. Fear will overcome greed. And right now, wealth confiscation is going to be the name of the game. We're looking at all the major banks that are doing this. McKinsey and Company has projected that the RWA, which is a tokenization of assets sector, will reach at least 2 to 4 trillion by 2030. Forget that number. It's going to be way bigger than that. Within 10 years, it'll be 30 trillion. The Genius Act alone is going to tokenize and bring stablecoins into the trillions of dollars. If we're going to have a monetary policy, it's got to be in the trillions of dollars to even be acceptable and utilized. So I would say we're going to be in the 50 to 100 trillion in this country within 5 years. I see it. In fact, I'm watching it in real time. And people know that are watching this program, you know that I know how to find this information out, and you know I'm right. And this is happening. We've seen this now. Bridging assets from centralized to decentralized exchanges has been cumbersome. So what are they doing? They're going centralized. I'm telling you, this is already happening. It's at your fingertips. I'm looking at it right here. Even though we put together very large-scale overviews on collective data of lots of things to try to put it together in a very simple to understand form, this is happening. When you start to see these hockey sticks of these various assets that I'm recommending within the next 6 to 12 months, you're going to be looking back going, I should have bought more. I wish I would have held on to it. My stocks are now tokenized. The dark side of tokenization is somebody could call the Fed and say, hey, this guy's doing something nefarious. The Feds lock everything up. It's up to you to prove the negative. That is not true. Good luck with that. So don't talk to me about, oh, it's not going to happen. The Bible's true, people. I'm Christian Briggs. This is the Hard Asset Show. We're going to have part 2 of this. Part 2 of this is coming. Don't forget, look at Apple Podcasts because we're going to be doing audio for the next 2 weeks as we're moving our studio. It's going to be down for about 2 weeks. So instead of YouTube, go to Apple Podcasts starting in about 3 days. We're going to be moving our headquarters. You know, we have a place in Puerto Rico. We have a place here in the mainland. We appreciate you guys. Make no mistake about it. What we had talked about the last 45 minutes or so is already happening. Have a great day. We will be back again tomorrow with another great show. And we're going to talk more about this. We'll be back then, and I thank you again for joining us.
Gold has nearly doubled in just 5 years, rising from $1,700 an ounce in 2020 to over $3,300 today. That's a 95% gain, outperforming the market and proving why gold is the ultimate long-term hedge. As global debt soars and currencies weaken, central banks are hoarding gold at record pace. Why aren't you? At Hard Asset Management, we offer award-winning service and fast, secure delivery. Call 844-426-4653 or visit bmcham.com. Protect your future with real assets. Own gold now. Follow on X at BMC_HAM for all news and the latest developments.